there's clear excitement for the ETF. There's clear excitement for the adoption that we're seeing, even in trends like NFTs.
Meanwhile, Bitcoin itself breaking out to a new all-time high before pulling back a bit. Our next guest believes there is enough excitement to drive the cryptocurrency to the $100,000 mark.
So the real question will be, can you do it, and how much validation do you have to go through to do it, and how compliant do you want to be? I do agree with you on this one idea. We're in a gold rush right now, or a Bitcoin rush, call it.
Right.
Between now and like 2035, in 2035, we'll have mined 99% of the Bitcoin.
Right.
So you've got 14 years. And during the 14 years, the block rewards are pretty high, relatively speaking. And so it's very lucrative to be in the business. The business is going to become less profitable, likely. At the very least, we know it's going to rotate into a transaction fee business. So instead of 90% block reward, 10% transaction fee, you could expect 90% transaction fee, 10% block reward. And the transaction fees are also going to scale more likely with the log of the price, not linear to the price. If I want to move $1 million, I might pay you $10. And if I want to move $10 million, I would pay $12, but I'm not going to pay $100. I'm just going to overbid the $1 million buyer. And if I want to move $50 million, I'll bid $14.
Yeah.
So the transaction fees will increase with the number of transactions on the base layer, and that'll be a dynamic, but the block rewards go away. And so if you're a Bitcoin miner, it's a very lucrative high growth business right now, but it will move toward an efficient transaction security network later. And you would do well to buy Bitcoin, right? That's why it makes sense to hodl Bitcoin if you're a Bitcoin miner, because it's your hedge. If Bitcoin, it's a hedge against two things, right? It's a hedge against the inevitable protocol, which is the protocol says Bitcoin mining is going to get 90% less lucrative over the course of cut in half once, cut in half twice. So it's a hedge against that, but that's a long term. It's also a hedge against the near term hash rate explosion. If you're mining Bitcoin right now, and if somebody comes out of the blue and they bring a lot of hash rate on the network faster than you expected, then your market share gets cut. Bitcoin may win. If everybody believes Bitcoin's going to win and there's a flood of people to enter the mining business, you want to own Bitcoin. Mining's going to get competitive. Bitcoin's going to get more valuable. You definitely don't want to be in a situation where you mine Bitcoin, you sell all your Bitcoin for cash, and then in that case, you're attempting to run a cash business in 16 years when the revenue's been cut in half 4 times. Quite a wonderful thing. It's a crypto universe. Satoshi played God, created, either call it creating your own universe and setting the planets in motion by defining the space-time constant, or the other metaphor is you released a creature into cyberspace, you set the genetic DNA. With that, I think we conclude that the Bitcoin mining network and the Bitcoin network in general is quite a wonderful thing. Now, the next question is, how does it scale? If we go beyond the network, the primary purpose of the Bitcoin mining network is to provide security and enforce, protocol integrity and durability of the system. And it does that very well. But so how do we actually scale out to provide hundreds of billions of transactions a day to billions of people on the planet at the speed of light, using the latest computer technology? That's, I think, where a lot of people fall down. They don't, they just want to look at the base chain and say, well, it moves 7 transactions a second, and so you can't scale. But they lack the imagination to understand the consequences of the layering. So the Bitcoin monetary network, it scales based upon platforms at the layer 2 level, and then applications above that level. And you could call them layer 3 applications, or you can also have applications embedded in applications on top of applications. So you could have layers 4, 5, 6, and 7, and eventually you could have interplay between the applications. But for the purpose of our discussion, let's just call them layer 2 platforms and layer 3 applications in order to keep from getting too confusing in our semantics. So what's the most important one? Well, Lightning is a very interesting and maybe the most important layer 2 platform. I want something to be exponentially faster and exponentially cheaper. And in return, I'm willing to secure exponentially less money. What are the applications of Bitcoin that scale the system? Because these are the things that make the difference. And once you start to think about the range of applications, then you figure out what you might build into your platform if you're trying to create a business hosting those applications. Well, the one thing I probably want to start with is this observation that one interesting application of Bitcoin is a bond. You can actually create a derivative or a security of Bitcoin and scale the network with the bond. So if a government owns Bitcoin, and if the government then buys the Bitcoin and then issues sovereign debt, the sovereign debt becomes a Bitcoin derivative. Mm-hmm. So you're creating credit from Bitcoin. Bitcoin is the base layer money, mm-hmm. and the debt or the credit of the government or the bond is the layer 2 money. It could be backed in whole by Bitcoin, like 100%, or it could be in part by Bitcoin or something. If a municipality, like a city, buys Bitcoin and issues municipal bonds, that becomes another form of an application of Bitcoin. You could take Bitcoin, there's $700 billion of this Bitcoin out there, and you could issue asset-backed bonds, call it Bitcoin-backed securities. They used to be mortgage-backed securities. And with mortgage-backed securities, we take a bunch of heterogeneous assets and we securitize them into a note. And so Bitcoin is, imagine you had 21 million identical houses called Bitcoins, and you decided you were just going to create a bond backed by 11 of them or 37 of them, an asset-backed bond. All of those are applications of Bitcoin. They're not applications the way a computer scientist thinks of them. They're financial applications of Bitcoin. You can have technical applications of Bitcoin that are running on mobile devices, like mobile apps. You could have web applications. You could have financial applications of Bitcoin. And a lot of times when people think about scaling, they only think about the technical applications, and they don't really think about the financial applications. In a place where the government is collapsed, then the solution is going to be a mobile wallet with Lightning, because there is no regulator. And wherever you have that kind of weak governance, then it's not going to matter. As the governance gets stronger, then there are going to be questions of what's your compliance requirements to do a retail banking application. And it looks like it's literally different state to state, country to country, jurisdiction to jurisdiction, and evolving right now. That's one of the reasons why maybe centralized applications, CeFi, will actually beat the DeFi. I mean, because the message of DeFi is, oh, it's really expensive going through all this AML KYC. Yes, that's true, but it's also illegal not to. So the real question will be, can you do it, and how much validation do you have to go through to do it, and how compliant do you want to be?
So what am I expecting for this week to be happening on the markets? I believe that Bitcoin is going to make that breakout to the upside. I would not be surprised if Bitcoin is going to trade around 38K during the days of this week, and meaning that will probably also trigger altcoins to start waking up some more. So do not forget to subscribe to this YouTube channel, and I'll see you again tomorrow for a fresh new update.